Hey everybody, Gary with Basecamp Trading. Let's take a look at crude oil futures today. So this is our 240-minute chart, and this morning when we came in, we were looking at this bar right here. Now the indicator is painting a bear flag. That's technically not a bear flag. It's painting it because it closed higher than the previous bar's low, but the low of this bar was actually lower than this previous bar's low. So this technically is not a bear flag, but that was the support level that we were watching, and that was at a low of 70.97. This was the bar that we were on when we came into the US session. We pushed down, triggered that in, and broke underneath yesterday's low. You can see we had a power line right here at yesterday's low, broke underneath there, and crude made a really nice push to the downside. Now we got significantly undervalued, and so we were extended to the downside, and crude's actually made a pretty good recovery back the other way. This is a pretty bullish bar back the other way, but overall this chart is still bearish. When we broke underneath this previous low support, we triggered in the bearish inflection, which is a bearish momentum signal, and crude made a really nice push lower. Here's our 30-minute chart. You can see that coming into the room, we were just mostly sideways. We doji, and then we broke resistance or support and then headed lower. Crude made a nice push lower. Got extended to the downside. You can see 3 bars in a row, significantly undervalued. And then, like I said, crude has made a pretty decent pullback, pretty decent recovery back the other way. Here's our Renko charts. And there's a lot of movement in crude today. Okay. Too many days there. Let me go back a little bit. Okay. Here we go. So here was that initial push to the downside. This is where we were breaking support. We pushed lower, made a 1-bar pullback, set up the wick off the 18, made another nice push lower, pulled back a little bit. We were starting to get extended, set up another wick off the 18 for yet another really nice push lower in crude. And we got extended, consolidated a little bit, and then we made a trend reversal breakout right here, because right here we had actually put in a higher low and broke to a higher high, but crude was bearish. Our higher time frame charts were bearish, and then we pushed down and actually reverse trend back the other way. Broke underneath the cloud, pulled back to the cloud, set up the wick off the 50 for another push to the downside. This would have been an aggressive short out of the cloud. We really weren't very well lined up right here. The more conservative approach would have been to wait for the previous pivot break. But so this would have been a potential aggressive trade to the downside. Just depends on how you're trading it. And then we started consolidating. But inside this consolidation, you can see we had this power line up here, making it a double top. We had this power line down here. But inside this compression area, you can see we were putting in higher lows each time. So we ended up with a nice breakout back the other way. Crude was very extended and was due for a nice pullback. The break of that resistance was at 69.66. The high of that run up was 70.26. Probably didn't get all $600 off of that move, but should have been able to grab $400 or $500 off of that trade. And then crude reversed, pushed back down, broke the cloud, pulled back into our moving averages in the cloud, got our momentum reset for another push lower, and you'd had a potential to get $300 per contract at that point. Now we are starting to get really extended again, and we started bouncing. We changed trend yet again. We broke above the previous pivot high, put in a slightly higher low, and changed trend back to the upside, broke through the cloud, pulled back into the moving averages, got a momentum reset. Good for one target is all. Pulled back, and then we got a triple wick right here, and we pay attention to this because this is giving us a little narrative of what's going on, kind of behind the scenes. Sellers tried to push price down, buyers stepped in. They tried to push it back down, buyers stepped in, left another wick. Sellers tried to push it back down one more time, buyers stepped in, left another wick, and then took control of price. The resistance break would have been good for one target. The wick off the 18 would have been good for three targets or $300 per contract. And these wick trades are continuation trades because they're a continuation in the direction of the trend. So you can see we had the trend reversal breakout to the downside, so the trend was down. We had the wick off the 18 for continuation lower, another wick off the 18 for continuation lower, another wick off the 18 for continuation lower. So these wick trades are actually continuation trades, and they're continuation trades in the direction of the trend. And you can see today, crude, a lot of volatility, providing lots of different opportunities to take advantage of these continuation trades, because again, there's a wick trade continuation, triple wick trade continuation, another wick off the 18 continuation. So again, just plenty of continuation trades available in crude oil futures today.